we have the current stock market update for Lee Auto Incorporated, stock ticker LI. Before we begin with today's chart analysis, if you find these educational materials to be helpful in your trading, please remember to click the like and subscribe buttons and leave your thoughts in the comment section below so that other traders will be able to find this information more easily on the platform. So as we can see here, this is the daily price chart. What we're going to do with this stock analysis is take a bit more of a longer term view here. Each candle on this time frame represents a one day trading session, full trading day. So as we can see here, the stock has managed to post some, fairly strong upside rallies here near term. What we have seen is a share price support zone that has started to develop right around $17.44. And since then, we are now seeing near-term highs coming in right around 26.78. So I should mark that in here. So this near-term high comes in at 26.78, and we are seeing that there are some technical signals here that are starting to develop, some upside price signals. So specifically what we're looking at here is this break above the 23.6% Fibonacci retracement of the declining move from 46.44 to 17.44. So we're looking at this price movement here. This level rests right around the 24.50 mark. So this is also going to come slightly in advance of that psychological figure at $25 per share. And then in addition to that, what we have here is this declining 200-day exponential moving average that is also coming into contact right in this same area. So this break to the top side here is a positive development because we have now broken through Fibonacci resistance zones as well as that 200-day exponential moving average, sort of all at the same time. Really for this stock, from the historical perspective, what you're really looking at here is a historical resistance zone that came in at roughly 2190. And now that we did see a break above there, as we can see, there was some upside price movement, and we even saw some gapping formation here as well. So overall, there are some significant moves here because that really could have been foreseen in advance because here we did have a break above this historical sort of sideways trading range that was occurring at lower levels. And then in addition to that, you have three different exponential moving averages here that are sort of forming right in the same zone. So once share prices did break above here, you did see some momentum start to accelerate and you did see a price gap that did start to develop to the top side. So these are positive movements to be sure, but what needs to be understood here is that when you see these types of gapping formations, in many cases you will see that gap filled. It doesn't necessarily mean that it must be true. If enough time passes without share prices moving into that region, it's possible that you will not see that price gap filled. But there is now clear risk to the downside here. Because if you start to fall back into those areas, that would be some negative momentum that would start to generate itself. In addition to that, what you have here is an overbought indicator reading on the daily time frame. We're just now sort of crossing into that area at the moment, as you can see here. So not by much, but just barely. This movement here in the relative strength index is significant because, as you can see here, there is some downtrend momentum that has been developing for this stock. So if you are currently in a long position here, ideally what you would like to see would be for share prices to at least sustain themselves at these upper levels here and for this relative strength index reading to break to the top side. If that does occur, then you can make the argument that this downtrend momentum condition has run its course and is no longer active and will no longer be influencing share prices. So what you would like to see here if you're long is for this relative strength index rating to break above here rather than failing and falling below. If that were to occur, you would then sort of validate this downtrend momentum reading, and then you would most likely be threatening this recent uptrend price movement that has been in place since roughly the 21st of June. So, currently there are some conflicting signals here. It's a bit of a rising wedge pattern, or I prefer to call those symmetrical triangles. I think the wedge idea is a little bit useless in my view. But this is more of in my view, this is more of a symmetrical triangle that hasn't, really reached its apex just yet. And what you would really like to see for the moment, at least, is for share prices to maintain this upward trajectory, which would suggest that share prices are continuing to show a positive condition, a bullish condition that is characterized by positive momentum. Positive momentum. So, more recently, this price movement to the top side, this is a significant price break because, we have broken through this 23.6% Fibonacci level, as well as this 200 period. It's really a 200-day exponential moving average. The next level to the top side that should be watched here comes in right around 28.65. And as you can see here, there is some historical resistance that can be found in that area. So if we go back to the May 6th trading session here, we can see that there is some resistance that has formed in this region. And share prices could start to encounter, some further selling pressure if we were to approach that area again. So, currently, these are upward price movements. These are bullish developments. I would be a bit cautious here. I'm not sure if I would be buying these breakouts to the top side because there are some signals here in the indicator reading which do suggest that share prices could start to reverse themselves. In addition to that, you've got those negative possibilities here with the share price gap that can be seen here really on two separate occasions. So you really could see share prices fall below 25.10, and then they need to fill a price gap back toward 24.20. So you could lose almost $1 in share prices here, and then if share prices continue to sort of move lower here, now you've got this other price gap that rests right around 23.65, and this could then extend all the way to roughly 22.50 as things currently stand. So, the most recent close here came in right around 25.80. I wouldn't really be recommending buying here because I do think that the stock could be in store for some unexpected volatility, and the balance of the evidence currently suggests that any new emerging volatility would more likely be encountered in the negative direction. So here's the current stock market update for Li Auto Incorporated, stock ticker LI. Our high value trading strategies membership is currently available for a limited time for only $9.99 per month. These high conviction investment strategies are characterized by superior risk to reward metrics that target massive market beating returns over time. Join now to outperform the market, lock in this special introductory rate of just $9.99 per month for the entire lifetime of your membership, and start trading stocks with the pros.